Alright, so welcome guys to today's lesson. Just be talking a little bit about swing trading, positional trading, and doing a little bit of a recap of past trades that we caught in the gold membership group, going over pretty much what we were looking for prior entering to these trades, how we put them on our watch list, and then what gave us that entry signal to capture on some pretty nice profits during the September months, capturing a lot of that breakout prior to this massive sell-in that came in on last Friday due to US-China negotiations. So we'll talk a little bit about pretty much how I look for my stocks, how I determine, where I'm going to enter, what exactly I'm looking for these entry points. We'll talk a little bit in generals, just looking at some general topics we want to discuss. And if you guys want to become a member, we talk a little bit more into the specifics of exactly what are these key areas that we look for in the fundamentals, in the technicals, and the qualitative to determine a lot of these stocks, and also any future plays, right? Markets right now are in a very interesting position. So if you guys want to check out our member section, you can just give me a message, and then we can start you off on a trial basis. And if you like it, it's just a low cost of $60 a month. But in that group, you get a lot of information, a little bit more details. A lot of these stocks that I'm going to show with you guys today, we shared in the group prior to these breakouts, and hopefully a lot of members here can attest to that, getting some nice returns in their portfolios. And also we go live with you guys as well, so I'm going to show you guys a little bit as well what happened on the Friday session and how you could have possibly positioned yourself for fronting pretty much, maybe de-risking before some of that major sell down came in, right? So I'll discuss in today's lesson. Hopefully you guys find it a bit informative, but before we begin, just going to be doing a quick disclaimer here, as just want to let you guys know that this presentation again is solely for educational and informational purposes only, right? The content discussed here should not be considered financial, investment, or trading advice in any form. I'm just going to be giving you guys pretty much some common strategies that I've picked up over my trading from some pretty big traders like William O'Neill, like Oliver Kell, like Richard Mogleen, owner of Trader Lion. Pretty much just just going over common things that I picked up from them and how I apply that in my trading and rule set to look for some stocks, right? There's no guarantee that, with this information, you will become profitable, but hopefully you can use it a little bit and get a little bit more financially literate so that you can have the ability to make your own decision making as well, according to some of these results. So again, none of this should be considered financial advice. Trading, guys, does carry a very high level of risk, and if you're not practicing good risk management, if you're not approaching this from a sound mindset, then the odds are you will lose, right? So it is very high risk, right? You have the risk of losing whatever you initially invest in the company, invest in the stock market, right? I'll give you a good story. When I first started trading out, there were several times where I'm very lucky because I'm supported a lot of my life, so I am very grateful for the opportunities I had, because when I first started trading out, I blew a $5,000 account, I blew a $15,000 account, I even blew a $30,000 account before I started getting a lot more profitable in trading itself, right? And I consider those growing pains, I consider that like paying tuition to get where I'm at right now, and it is the case, right? So just know, I think that you guys also do have a step ahead because you're able to watch videos like these, to learn in a community like ours, to kind of give you that head start on the right approach to trading, right? But it's up to you if you guys are gonna listen to that. It's up to you if you guys are gonna apply that to your own as well, right? So just know that again, we're not financial advisors, right? We don't know what kind of risk you're taking or anything like that, right? And also going to be going over some examples in today's lesson, and that's not a guarantee that we'll get future results as well. It's likely, we've seen kind of these trends work out pretty nicely, but there's no guarantees in this business. So just make sure you guys take everything with a grain of salt. We'll be going over a lot of topics today. If you guys have any questions, feel free to jump in at any moment. I know a couple mics are muted, so if you guys have any questions, just let me know in the chat as well, and then no problem, anytime I'll be happy to answer your questions. Okay, so let's get started here. First thing I want to talk about is trading versus gambling, right? With this recent downturn, what has happened is a lot of people in the group have reached out to either me or to my dad or to Harpreet and ask in panic, telling them what should we do here in this market, right? And all that tells me is that if you're in that panic state of what happened on Friday, then you didn't have any sort of game plan going into the market ahead of any of your position size, right? All that tells me is that you're not trading, you're gambling, right? And it's very easy to kind of get caught in that trap just because of how the market itself works, right? It's very enticing, right? It is kind of like a casino where you place your bets and you have the expectation of making profits, right? You can, you take a risk and you can make money either very quickly or you can lose it very quickly, right? It does happen a lot of times. So there's a very thin line and very thin structure on, what separates this game from trading versus gambling, right? And what I say, as a lot of members will know in the group already, is that pretty much what separates it is if you have these three main tenets, right? You need to have these three main pillars in your core fundamental building structure to be a successful, to be a consistent trader. If you are missing even one of these, right, then it's likely that you will fail, right? And these include your trading strategy, right? Trading strategy involves what rules are in place that determine your entry, your stop loss, and your take profit, right? And we'll talk about in this lesson, you'll see a little bit of a brief discussion on what my rules are that I have in place that I need to see met in order for me to take a trade. Even if one of my rules or one of my conditions is missing, then I will wait, right? I'm not being, as retail traders, we're lucky because we don't have to be in a trade all the time. We don't have to, meet some sort of arbitrary profit goal that is set upon us by some sort of hedge fund manager or by some sort of client, right? We're able to manage our own money, and we're very lucky to do so. So we can be very, critical, very detailed on exactly what's going to determine our entry and our exit. So you need to have rules in place that determine when you're going to enter, when you're going to get out, and when you're going to take your profit, right? A lot of people don't have these rules. They trade based off like, oh, this person told me this, or they trade based off emotions. Like they get into, they try to get into this predictive mindset where, oh, the market run up, it has to turn back, or the market keeps going up, I have to get in now. Trading without any sort of sound facts or any sort of sound thesis, right? And I'll go discuss with you guys a little bit of exactly what my thesis are. We'll go over some examples on how it worked out, and you can kind of see a little bit of how to develop that structure for yourselves as well, right? So make sure you guys aren't trading on someone else's advice. And with every trade, guys, I always say this in the group as well, but make the trade your own, right? We put in a lot of information in the group with a countless amount of stocks, right? How I trade, right? I put my stocks in, my dad puts stocks in, and Gurkha puts his stocks in, right? But don't just solely go off of that, right? Take it, study it, make sure you guys know what the company is about, make sure you guys know what the thesis of the trade is out, and make the trade your own, right? That is the goal, right? Because I will also say that we're talking about kind of strategy here is that everyone has a different strategy, right? And not everyone's strategy is guaranteed to work out for everyone else because everyone has sort of different psychology. Everyone has a different approach to how they do things based off their own beliefs and their own values, right? So how I trade could be very much different from how you trade, right? And it's also, you see it in the group as well. My dad's strategy is very different from my strategy. My dad likes to buy, strong fundamental companies with good balance sheets, with good prospects for change that are kind of under decline, right? And every sort of decline or lower swing low that is showing up with relative strength, he'll add a little bit more position, waiting for that turnaround breakout situation, right? And that's very different from how I trade. I trade based on, seeing kind of my strategy. I look for good momentum growth plays, right? I look for strong leaders that are in trending industries, that have a strong fundamental core, that have the ability for expansion, right? That have the ability for strong growth, because that's ultimately what's going to be affecting the stock price, right? If the company is strong, it's fundamentally growing, then I'll look for those stocks, right? And they do tend to sometimes be at all-time highs, right? That's why my dad is, again, very critical of my strategy, because he's unable to buy stocks that are already, so elevated to the upside, whereas it's against his strategy is kind of different from me because it goes against me to buy something that's, declining, right? So everyone's strategy is to their own, right? If you guys like what I'm saying in some of my stuff, you don't have to apply it, completely to your trading, but hey, if you like a point where I said here or said it there, and then apply it to your own trading and make, your strategy your own as well. Like as I mentioned at the start of this lesson, that my trading doesn't just encompass William O'Neill's canceling, but a little bit of what like Richard Moglen teaches, a little bit of Oliver Kill, what he teaches, a little bit of Stan Weinstein and the stage analysis. So I'm taking like different tidbits from seasoned traders that have like a good track record, and I'm applying that to my strategy as well, right? Because it works differently for how I look at the markets versus how they look at the markets. So make sure you guys have a strategy. It needs to be there. I know a lot of people, kind of talking into my next pillar here is trading psychology, is a lot of people just trade off of fear, they trade off of greed, right? They fear that, they are don't want to get into the market. They have a really good setup. They see it play out. They're just fearful to take that risk. The trade happens, they get FOMO, and then they try to chase. Or they get FOMO because they don't want to miss out on a really good play because of so and so telling them that. So they jump in early, preemptively, without any sort of rules or base set, right? And greed is also that way, right? Greed, oh, gold at all-time highs, it has to go higher, keep pouring more money into gold. Or, market is now in downturn, things are cheap, it has to go back up, let's pour money into it. Or like, oversizing into very risky plays because they have that expectation of profits, or over trading because they want to catch every single move, right? These two emotions, fear and greed, I think dominate the stock market, so much so that there's an indicator that we'll sometimes share in the group as well, where it just measures what the market is feeling. Are they fearful? Are they greed? And we're kind of on that scale they're at, right? Because it does tend to pay into the market, right? If you're able to control these emotions, though, I would say, are already better than I think 80% of traders, right? The major reason why a lot of traders fail is because they're unable to control these two emotions, right? So an easy way to kind of gain control of fear and greed is have discipline. Have discipline to stick to your strategy will eliminate a lot of that, right? If you're completely a rules-based trader, like for me, I have rules when I'm going to enter, I have rules when I'm going to exit, I have rules when I'm going to like consider when to take positions off. I'm going to have rules to consider when the stock is going against me, what to do, right? And these rules guide my trading, not what the market is doing. The market could be up, the market could be down, it could be sideways, it could be whatever. But if my rules are not being met, then I'm not going to enter a trade. And if my rules, I'm not going to exit a trade, right? I'm very, conditions, it's kind of like coding, right? Unless it's programmed into my system what to do, I'm not going to do it. All right. And that's how I approach trading. And it's been working out pretty well for me because it eliminates a lot of that fear and a lot of that greed, right? So that is pretty much, again, how I approach the markets in terms of psychology, strategy, and then risk management on top of that is also very important. Risk management is how you stay in the game. If you don't have proper risk management, then it is likely that people like burn through cash really quickly. They take unnecessary risk in a lot of plays. They're not thinking in terms of capital preservation and, in a risk first mindset, but with the expectation of profits, right? So you need to have a good risk management base. You need to, whenever you're entering into a trade, not to think, oh, markets are elevated, I'm gonna short the market, I'm gonna buy some puts, I'm gonna buy SQQ because we have to go down, and you have this expectation that, okay, we ran up so heavy since April, we're gonna have a significant drop to the downside, right? But then it goes against you, and then just because you have this expectation of profits, you haven't considered what the trade is gonna do if it's in a loss, right? And it leads to panic, right? If you don't have a stop loss, if you're not positioned well, then that loss could start to magnify against you, right? Especially if you're in a short position, right? Your losses could be infinite to the upside. So it's just very risky to not, if you do trade, to not have these tools in place. So you need to have a good stop loss, right? For me, I'll share with you guys, I follow the O'Neill strategy. I use a max 7 to 8% stop loss. If I can get less than that, I'll buy in. And I stick to this, right? Even if I have an amazing setup, an A+ stock, so and so is buying it, all these institutions are getting in, right, and yada yada. But if it doesn't give me good risk management, where the stop loss for at least my liking is above 8%, then I'm not going to get in, right? I need to see these three pillars need to be working together in order for us to be more successful. So have a stop loss, position sizing, thinking in terms of risk versus reward, and having a good win-loss percentage. These things alone will improve your trading drastically, right? And again, these three things are fundamental, right? You can have like a good strategy, a 100% winning rate strategy. You can follow again, look our examples here, and you can see that not every strategy again is going to work 100% time. But if you believe that, you can have a 100% winning rate strategy, bad psychology, bad risk management, and you'll still be losing, right? I've seen a lot of traders that have a bad strategy, a strategy again still defining their entry, their exit, their stop loss, but not working out all the time. But because they have good psychology and good risk management, they're still profitable in this game, right? So you can have a strategy that wins 40% of the time, but if you're practicing good risk management and good psychology to stay disciplined to when that strategy is in place, and you have a good win rate ratio, then you'll still be profitable, right? So again, these three things are very important, and I just wanted to mention this just because there's a lot of people in the group that I feel don't have these three pillars, right? And it came very evident based off what happened on Friday's session. With that massive downturn, you can see that a lot of people were trading based off of this person's saying something, or based on because the market's running up, because there's expectation for profits. They were hoping that prices go higher, and then because it turned against them, they were left frozen, unable to know what to do, right? So hopefully, by going through some of the stuff we talked about today as well, you can get a little bit better mindset about strategy, about psychology, and about risk management. Okay, so let's talk about strategy, right? So we'll discuss now pretty much what I look for in a stock in order to get into a swing position. Again, I am a growth momentum investor, so I am looking for strong leaders in trending industries, and I'm capitalizing on setups, right? Depending on if it's meeting my certain conditions here, right? So what are those conditions? We'll start off by looking at fundamentals. So there's three main things I look for, right? I look for the fundamental perspective, qualitative perspective, and technical perspective, right? So for the fundamentals, again, I do have a background in CPA, right? I do have a background in like auditing. I used to look in, financial statements. I used to, dive deep into, what's in the inventory number, what's going into the profit loss statements. And I used to like do all that kind of stuff, right? And it was very important for being an auditor. Not so important here for swing trading, right? It's a good idea to have a sense of what's driving, some of those key financial numbers like inventories, receivables, and stuff like that. But you don't really need to be too honed in completely understanding, what an income statement is, what a balance sheet statement is, and all that kind of stuff. You need to just be very focused on very few sectors. The first thing is what their revenues are, their gross profit, and their income, right? Because at the end of the day, that's what's going to show signs of expansion, right? If a company is showing strong growth in their revenues, meaning that they're able to make more sales, they're able to increase their prices without losing any sort of significant market share, they're able to expand into different, sectors, establish new products, establish new brand loyalty. If those things continue to have positive impacts here on their revenues, gross profits, and their income, then that's going to show signs that the company is strong, that it's going to, have good room for expansion, right? So typically with these numbers, I'm looking for a solid year-over-year growth of at least like 25%. Could be less, but if it's less, I need to see good acceleration in the last 3 quarters. So looking at the earnings statements, looking at the last 3 quarters that they reported, and to see, is their revenues growing? Is it expanding? Are their gross profits strong? Are they able to manage their costs well? And are they even reducing longer term costs, which are possibly adding positive impacts to their income, gross profit, stuff like that, right? So not too crazy, right? Just a quick view of the income statement. And then you can see, again, a lot of good resources. TradingView provides a lot of good resources. Seeking Alpha, Yahoo Finance, Finviz, you can take a look there as well. And it provides really good information that you can quickly analyze the company's income statements, right? Looking at the balance sheet, the main thing that I will look for in a company is their solvency. I want to make sure that the company has enough what's called working capital in order to meet kind of its short-term obligations, right? Meaning it's able to buy its inventories that it's selling, it's able to pay its employees, it's able to fund like the day-to-day operations, right? So it has to have good solvency. And I also look at the debt to equity ratio, because how leveraged a company is could also make it more risky, right? So for the current ratio, it needs to be above 1. That means the company has more assets than liabilities to fund its operations. And the debt to equity ratio, I like to see it at least 1 or even less is nice, right? Because if a company is too debt heavy versus their market cap, meaning that they have like a lot of loans, long-term leverage, then it becomes a higher risk, because they're more volatile due to their market risk and how interest rate decisions will impact it, right? Like if you have the market right now buzzing on the hope of interest rate cuts, so that's also driving a lot of stocks to the upside, but especially your high leveraged ones, right? So it does carry additional amount of risk there, and they do tend to see a little bit more volatile moves. And also it does make the company just a little bit more risky, right? So in terms of, again, the balance sheet, don't have to dive too deep into, okay, where's cash coming from? What is accounts receivables? What is this? Like, what is that? But if you have a general sense of, okay, they're able to meet their current obligations, they have good cash flow coming in, then that's good signs for me, right? You can also analyze the cash flow statement as well. That is also a good statement you can use to determine signs of expansion, contraction as well. And then the last kind of key fundamental to look for is their market cap, right? And why market cap is important, because that also can tell you how volatile a stock is, right? If a stock has a small market cap and doesn't have that much shares outstanding, then it requires very little volume in order for you to get the stock moving, right? So you can lead to very quick moves, a lot of volatile up down type of action. You'll see this in kind of like recent IPOs or small companies that are just recently gaining traction in the stock market, right? And then some of your like more heavier companies, like say a Microsoft or like a Meta, which have very high market caps, it requires a lot of volume, a lot of pressure in order to get price moving, right? So that's where market cap plays a key factor. Again, we trade all sorts of market caps. I'll trade small caps, mid caps, large caps. It doesn't matter as long as that setup is there, but it will kind of determine a little bit of my trading, because again, with the small caps, it is a bit more volatile. With the mega caps, I would have to wait for moments where I think that there's going to be a large amount of influx, a large amount of volume coming in. Okay, so that is just fundamentals,
What
right?
is,
Again, nothing.
sorry, Harvey, what is the minimum market cap you're looking for
Sorry
when you?
about that. So again, yeah, so nothing too crazy there. Just again looking at some really core things in these statements that sees that really if the company has room for expansion, and if it has the backings, the foundation to fund that expansion. Okay. Sometimes I will trade a company that shows weak fundamentals, but if there is a good story that can, and that there's a good story backing it, there's a good thesis that is backing it, right? And these kind of plays I will consider high risk plays, right? And I will go over some examples of these high risk plays today as well. But in thesis, pretty much the thesis, the storyline, it needs to have a positive prospect that will lead to some sort of core fundamental growth, right? So this could be like industry tailwinds, like how we saw in the aerospace defense sector. You're seeing, how Trump is pressuring all his Europe and NATO allies to increase their defensive spending, upping it from 2% to 5%. So that was a positive tailwind in the sector. And also things like how we're seeing increase of drone usage, right? In the Middle East, with tensions now dying down, right? Which kind of also leading to a little bit of downturn in the aerospace defense sector as well. But prior to that, when these tensions were rising in the Middle East, as well as Ukraine and Russia, that was also creating a lot of positive tailwinds in the aerospace defense sector. And we were seeing a lot of nice moves, even in some of your more riskier names like KTOS, which is a little bit more good fundamentals, had a really nice move to the upside. AV, which is a little bit more risky, had a nice move. So we were kind of seeing good industry tailwinds leading to strong growth, right? And another good storyline is like future contracts. If there is the expectation that the company will reach profitability in the future, and we were seeing this like mainly in the we were seeing this mainly in like the quantum sector, right? With names like Rigetti, QUBT, IonQ, inking big contracts with some government facilities, was showing strong growth in that sector. We're also seeing it in the nuclear space, right? A lot of companies like Oklo, for example, that doesn't have strong fundamentals, but just because nuclear is kind of getting all this interest from political tailwinds, from data center increases, that's kind of creating a lot of upside pressure, right? So sometimes you can trade a company that doesn't have strong fundamentals, but there's good prospects for growth. But I would again consider these names very high risk, because if we do start to see extensive downturn, typically these high risk plays are where most money comes out of first. Okay. So that is kind of a bit of the fundamentals, a bit of the thesis, a little bit of qualitative there as well as what we look for in some of these swing trades, some of these growth momentum plays, right? And then very simply, the technicals, when looking at the chart, I'm only looking at a very few things, right? It needs to be in a confirmed uptrend. So there needs to be higher highs, higher lows. There has to be strong institutional ownership in the company. As got to see strong buying coming in on. So a strong uptrend will confirm that. The price will also need to be above some key moving averages. Typically, I like to use the 200-day SMA and the 50-day SMA. It 100% has to be above these levels for some good entries. It could then play around the 10-day, 21-day EMA as well. Also, around these key moving averages, a lot of the strategies that we use is a lot of breakouts, right? If it breaks out above the 50, breaks out above the 21-day, could also be some good opportunities. So just looking at the key moving averages again. On the short term, the 10-day, the 21-day EMA, and on the long term, I like to use the 50-day and the 200-day SMA. All right. And then again, confirmed uptrend. Also, there needs to be good supply demand characteristics, right? So for that, you guys will know, a lot of the members here will know that you like to use the money profile. That gives a really good indication of bullish versus bearish sentiment, as well as looking at the daily volume bars to determine days where there's above average buying volume versus selling volume. And then also again, looking at days where we get those breakouts. Again, we'll go over some examples here as well, and you kind of get a bit more of a clear picture of what I'm talking about. But looking for days where it breaks out and we see good volume on the breakout, leading to a push to the upside, right? And then some other things, again, if you guys check out the, if you remember, check out the swing trading refresher course where we talk about, technical patterns that we look for, certain bases that are setting up for good breakouts, or if we're looking for a good pullback to a support level or one of these key moving averages, looking for that contraction, then led by expansion. All right. So that's pretty much, again, what I look for some of these trades, right? Again, very simple, nothing too crazy, but I am very diligent, very disciplined to follow these rules, right? If one condition is not met, if a company could have the best fundamentals, a good story, but if it's below the 200-day, below the 50-day, then I am not trading it, right? Because those are conditions that I've set out, right? Because I'm more confident that when these conditions are met, as strenuous as they might be, provide me with some good opportunities for trades, okay? So that is pretty much my strategy there, guys. Another very key component of my trading in this strategy, again, if you guys follow CanSlim, the M in CanSlim is the market, right? And the overall market condition is very important because we're looking for growth and we're looking for momentum plays. A lot of the move that is going to be captured, they say roughly 70% of the move in the stock comes from the industry, comes from the market. So if the market is in a strong uptrend, if it's showing some signs of growth, that is typically where I would look to take more risk. But if we see market kind of breaking down, then that's where I look to maybe de-risk and maybe wait to see what's going on in the general health. So the majority of the stocks move is linked with the sector that it's in and the general health of the markets, right? This could also include the industry, right? Sometimes we're not really seeing, overall confluence where every sector is moving up at the same time, but certain ones are getting traction. Like I mentioned earlier, if you look at the aerospace defense sector, we talked about that several live sessions as well. That was kind of moving up in a nice direction. Healthcare got a nice boost up recently. We've been seeing since really April, regardless of this recent pullback, we've been seeing since April, the market in data centers have been really strong. Hyperscalers have been really strong. And that's kind of leading names like NVIDIA, AVGO, APLD, some of those, stronger names in those spaces. Majority of the move accompanied because of the industry giving tailwinds as a whole, right? So looking at the bigger picture will then help you determine how to position as well, right? And we'll talk about it as well. Take a look at the chart. We'll do a little bit of a market debrief here, but you can see that, if you guys were in the group, that we have been mentioning for several times now, this market, guys, it's pushing up, but it's extended, right? And we kind of, the notion was in every sort of morning update, in the weekly outlook that I shared with you guys as well, that we were, prior to the Friday's move, even on Friday morning, I mentioned that the market is still risk on, but be very cautious with your entries. Look for really good A+ breakouts. And if you do catch profits quickly, lock it in and manage your stops tightly, right? And the reason I was saying that is because what the market condition was telling me as a whole, right? We were extended, we were at highs, we were kind of in the higher high of a trend count, making new all-time highs based on very weak market structure, right? So that's how kind of it really guides my trading. Typically, if we sort of see now, markets can pull up back easily, if markets go back in an uptrend, then I'm looking for stocks that are, giving good relative strength and looking for that push back up as well, right? So you need to understand, again, what the chart is telling you. You can look at, the general indices. You can look at the S&P 500, the NASDAQ, the Russell, the Dow Jones are the major indices to watch for, and then just see what the chart is telling you, right? I apply the key moving averages to the chart as well. I'm looking at the 10-day, the 21-day EMA, looking at the 50, the 200-day SMA is a good sign, and to see if, what the trend count is. Are we seeing higher highs, higher lows established, pushing the market up, or is there now room for possible downside, right? So reviewing those key things on the chart and also understanding what's going on in the general economy and what sectors are gaining momentum versus what sectors are losing steam, right? We're kind of seeing now possibly if we see a bit more of a downturn, there could be some rotation out of the major names that are kind of extended, like your semiconductors, like your technology sectors, which could then rotate possibly into maybe your financials, maybe your staples. We'll see how that plays. And also understand what's going on in the general economy is very important, right? Right now we're in a time where there's just so much uncertainty due to, now what's going on with this China US, tariff situation. Do things get worse regarding these rare earth metals, right? And also what's going on with tariffs, right? We have the Supreme Court decision going on. We have this government shutdown happening. We have people losing jobs, right? So just understanding that that's going on in the backdrop will also give you a little bit more hesitation that, market's a bit up here on fluff, right? So We'll see what plays, right? With market conditions though are very important, and they do guide major tenet of my trading. You guys will also see that if you guys are a member in the market updates channel at the end of each week, you'll get a bit of a keen insight of what my market exposure is, right? And that comes from looking at my universe of trading, looking at the stocks that I have on my watch list to see how they're performing. Are they like breaking out with strength? Are they failing? Are they pulling back? That will kind of give me a sense of where to put my market exposure. But again, also what I mentioned here, looking at the major indices, applying these conditions to them, seeing how that plays, as well as looking at what the general economy is saying, and from there I will determine my market exposure. Even if again I have a high grade A plus setup, a stock is presenting all the right things, but if the market isn't giving me much confidence for upside, then I'm gonna not play it, or if I do play it, I'm gonna play it with a very low size. Okay. So with that being said, guys, we can take a little bit look of what the market is doing now. Again, for the members, I will share a bit more of the insight here in that market update. So stay tuned for that. I'll be dropping later in the session, as we do every Sunday for you guys. But we'll see what plays. Right now, you can see. Again, it was so crazy on Friday. We were mentioning market was still risk on, right? We had no conditions to sell. Market was above the 10-day, 21-day. We were seeing possibly now a confirmation uptrend, but then we got some pretty excessive selling coming in on that Friday market, right? So the best points where we entered that we caught a lot of plays that we'll go over examples right now as well was on this recovery, right? And you're kind of seeing that this pullback pretty extensive, but we'll see what plays now and if it can defend, right? Because last time we got this kind of correction here, you can see that previously we kind of bounced out every time, right? So no one knows what the market is going to do, right? No one has a crystal ball and can tell you with 100% certainty that, oh, we're obviously going to bounce from here. We're going to push lower, but you need to have these things, these parameters in place that will guide you what you want to do, right? So back here in like early September, when we were seeing kind of this heavy downturn that took place, at the start of September, you had, seasonality coming into play. You had a lot of traders, me included, say, hey, September tends to be a bearish month, and we finally got signals of a possible break below the 10-day, 21-day. This is where we kind of look to maybe, offset some of our sides, right? We kind of saw panic in the market, kind of de-risked a little bit, but then we saw a quick recovery, right? As soon as this market kind of bounced, it kind of bounced in the afternoon session on this day, and then on the next couple of days, we saw strong follow through, right? So on this break back up, well, now we have confirmation uptrend. Price got back above the 10-day, 21-day. So after September 4th, on its way up, this is where we're looking for favorable long entries, right? This would have been good conditions, especially as we were breaking out, making new all-time highs. This was kind of the market conditions where we're confident, okay, market could see continued upside. We were also seeing at this time, in September, a lot of these deals were being announced. Intel, Nvidia, OpenAI. Market was, very optimistic after the FOMC meeting that cuts were going to happen. So there are a lot of good tailwinds, right? Market was in a very good uptrend. So this would have been a confident area to be long, right? All the way up to until we got to this week's action, right? And in this week, what we were seeing was signs of possible topping, right? Markets were still risk on. We were still, saying in the group that we're still making higher highs, higher lows. We're above the 10-day, 21-day EMAs. But I was telling you guys to be a little bit more cautious because we were getting days where we're getting above average selling volume versus this buying volume coming in, right? So there were signs of some distribution even inside this consolidation. So we were being very hesitant, right? I was limiting my market exposure. I wasn't really sharing many stocks with you guys. And I had mentioned that, if you do see breakouts, lock in those profits quickly. And if it turns against you, make sure you guys respect your stop losses, right? And you kind of saw that on the Friday session, and how you could have played it. Looking back, if you guys are watching the markets on Friday and you were thinking, like, because a lot of people were panicked, right? They started calling us on Friday, and while markets were closed, what do we do now? Like, what's the position going into? And a lot of these guys that were giving us these calls were in some very high leverage stocks and some very outrageous positions that we wouldn't be in the first place, right? Just fear and greed kind of taking over. And because of that lack of having a strategy, of lack of having, a strong emotional foundation, it led to panic. And a lot of people are still not hoping that the market turns back around, right? But how you could have played this, if you guys are watching this condition, because this was a pretty heavy sell that we got on Friday, right? Friday on the ES here, it was about a 2.7% drop, a 3.5% drop on the NASDAQ. So pretty heavy selling coming in. You're not respecting any sort of, prior swing lows, prior areas of support, breaking through some key moving averages. So it was kind of melt action, right? So watching on Friday, what we were seeing is, okay, aggressive selling coming in. Price then broke below the 21-day. This is signs. And also morning market updates, you also hear me say that this 10-day EMA is very important, because if we're holding above, market is risk on, but if we lose it, it's risk off, and you want to probably manage your position size. So that's what we were doing exactly when we saw this heavy sell come in off of that newsprint. Again, it was very, news driven with this, China now putting import restrictions on rare earths. Trump then responding to that, making a very outrageous comment on Truth Social, retaliating with 100% tariffs on China, and then also saying that he might not meet with President Xi, but then now later, after the market close, he said that he might still meet with him, right? So Trump itself is also very much a wild card, right? Because this news is very honed in on rare earths, well, what's going to happen is your major sectors that have been leading, like your semiconductors, your technology, your Nvidia, your OpenAI, your Microsoft Metas, that are very reliant on these rare earth metals. Well, because they make up so much of the market, right? The Meg 7 names alone making up 33%, and because they're being so dependent on these rare earth metals, that's what's causing this heavy downside to take place, right? So at this point, okay, yep, signs of worry. We're a little bit panicked, but hey, we've seen times before where the market bounced and pushed back up. But later in the afternoon, there was no bounce, right? Market kept pushing lower. And as things got to the downside here, you guys can see in the portfolio alerts channel, right? And for the members, I mentioned that I'm closing out my Marvel, my SE position, and I said reducing exposure, right? Because around 11:30, once we kind of broke below the 21-day EMA and there was very limited signs of a bounce, we were kind of seeing some heavy downside, right? And we were kind of well positioned because we were looking at the daily and we were kind of seeing some of these indications of topping happening prior. All right. So again, this is how looking at the markets can really help guide a lot of your swing trading as well. And it really helps as well in terms of my kind of trading, because we're looking for that momentum and growth. And we need to see markets in a confirmed uptrend in order to be a lot more confident in those type of plays, right? So a little bit of tidbit now. Again, I will share with you guys for the members, keep posted in the market outlook. But right now, what I'll be watching in the oncoming session is I'm going to be waiting, okay? Because you have a significant drop like this, you have a lot of traders, again, greed gets into the play, FOMO gets into the play, where they want to now say, oh, the market's cheap, this is sale, let's get in right away, right? Let's buy, let's see if it pushes up. But for me now, none of my conditions are met. We're below the 10-day, we're below the 21-day. There is no confirmed uptrend anymore as we broke these prior swing lows. So I'm going to wait to see until the market gives me better conditions. And hey, if we see kind of, Trump announce, guys, we made a deal with China, the rare earth thing is kind of scrapped here, then markets turn right back to the upside, there's very much we could see that V-shaped bounce. But I'm okay with missing out a little bit, right? If Monday we see a kind of a straight recovery back up to some of the key levels, there's some stocks that are presenting good upside, I'm okay with, being okay, cool, I missed out on that initial wave, but I'll be more confident if we start to see now a reclaim of the 21-day, a higher low established, and then some sort of move to the upside, right? With this extensive pullback, with this kind of volume that we're getting, there's several things that could play out, right? We could see, again, continued aggressive downside to some weekly and monthly support levels, giving us a big, more of a correction, right? Because if you take a look at the price range, this drop here wasn't really that significant. Typically, markets drop, I think, like 5% every like 4 to 5 times a year. Sometimes they drop 7% one time a year, and then anything above 10% would be kind of a major market correction. It would have to be a little bit more news driven, right? So with this drop already from highs, we're getting just about a 4% drop. So there is still room to downside, right? There is some possibility that we could come into previous monthly swing high levels just because of how extended we are. So we could see action where maybe Monday doesn't look too good. We get some sort of this downtrending type of action. We get a lower high established, leading to a stronger move downside, right? See if we get a trend shift here on the weekly, because if you look at the weekly time frame, right, with this pullback, this is just 1 day of red, right? So it's hard, 1 week of red, one candlestick of red. Hard to really go off of that to say if we're going to get continuation. So we'll see if we get some sort of maybe lower high continuation, or do we get a direct pullback as we are coming into an area of a prior swing high here on the weekly time frame. So this week I think will be very important, but that's why I'm kind of saying it's going to be maybe a hold and a wait type of week. We'll see how the markets want to digest this massive down move. We'll see if we get any more clarity on news coming out. Also, we have a lot of volatility stuff going on, so I definitely think that markets will be volatile. We'll see a lot of up down kind of range type of action, because we also have earnings, right? A lot of major earnings coming up with major banks set to report on Tuesday. We also got some tech names, TSM going to be reporting, AMSL going to be reporting, so they'll be pretty interesting to watch for, and that could create momentary spikes of volatility as well. And we also got the The BLS has delayed CPI numbers, so we're not going to get that this week, but we're going to get it next week. And we're also going to get the FOMC meeting coming up as well. So there's still a lot of things going on, a lot of volatility to be had, but we'll see how the markets want to play out, right? So if we do bounce on Monday, again, it's okay. I'm okay with missing that initial move. We could also see action, like ping pong action here between the 10-day, 21-day. See the market establish base till we get some sort of next major headline that either then sends it back up towards all-time highs or it crashes us down back towards new lows, right? So we'll see how the market plays, but again, you can see how my thinking is here, right? Well, I'm not thinking automatically, okay, the market saw red, it has to do something now, right? It has to go down further, it has to go up. I'm not letting emotion control my biases, but having these kind of different like situations that could play out and then just being able to react accordingly, right? You don't want to predict on emotions, but react on conviction and strategy and tools. Okay, so that is a little bit insight there on the markets, but hopefully that gave you guys some insight of exactly what we're looking for. Knowing where the markets are doing, knowing what certain sectors are doing is a major component of my swing trading. Okay. So that being said, let's take a look at some examples here now of past winners that we caught in this past couple months of trading. The first one here was APLD, Applied Digital Corporation, right? So the major thesis with this company, it was that they had some major announcements that they were announcing partnerships with CoreWeave. This sector as a whole was getting some positive tailwinds as they are in the hyperscaler based business. There was additional capex spending, major partnerships with all these major tech giants. So that all in all was creating some upside here. You also had very good earnings from AVGO, Broadcom, which was lifting a lot of these names in the sector as well. So good industry tailwinds, right? And this is a condition where this was the first setup that we had taken on this name on APLD, as it was giving us a cup and handle setup. And then you can see this is some good supply demand characteristics, right? So you were seeing days inside this base setup where we were getting a more average above strength buying versus weak selling going on. The money profile here, which is also an indicator that you get access to in the member section, will also kind of give you strong bullish sentiment there. So all the conditions were met, and we took that initial breakout here as we were getting really strong volume on this August 18th move. We held it for some time, and this was just an area where not every trade works out, right? And as we were kind of getting that pullback, it started to kind of failure here, and it kind of hit a stop loss here when it kind of broke below the 21-day EMA. But we caught a nice re-entry when it kind of pushed right back up into that pivot. Again, looking hindsight, the pullback here was on low contraction, low volume, came above the 50-day SMA, and this was a low contraction breakout kind of play because it started to pull back again with low volume. Volume got tightened, and then as we saw this breakout here on September 10th, again supported with a good move on the markets as well, and then we kind of saw a nice move and continuation, this leading to a 40% return. Right, so just a nice play there. Again, just waiting for certain conditions to be met. Good sentiment here came in, and again, no harm in playing the stock twice, right? I still believed in this company. It had really good fundamentals. If we take a look at trading view here in a second, just give me 1 minute. Where is my... Right, so if we look at trading view here, so we go to APLD. Again, just really strong fundamentals backing this company as well, right? Look at the financials here. The statements, the income statement here. So just strong growth, right? We're seeing good revenue growth here. Revenues in this past quarter were a bit shot, but they're still exhibiting signs of strong positive tailwinds and a really good balance sheet here as well. Good, strong current assets over liabilities, and looking at their solvency, you had a very good current ratio, holding relative levels, and really good debt ratio as well, right? So all in all, good fundamentals, right? And a really good technical setup and positive industry tailwinds, leading to a very strong move here to the upside. And then this was some really nice gains. Again, with this move, I think it did consolidate a little bit further, pulled back a little bit since this, but you could have, as you got the initial breakout, right, just riding the 10-day EMA. So this first stop loss here would have been about a 7 to 8% stop loss. I can't completely remember here, but using the 10-day, 21-day as that key level. And then once that breakout continued to hold, once, the 10-day started to cross over above our entry zone, then this trade pretty much became risk-free, right? We're putting our stops at break even and wipe my hands with it, sleep easy, see how far it wants to take us, and end up giving us some nice returns, locking some in at 20%, locking it all in at 40. Okay, So this was a really nice move on APLD. Again, just looking at the overall sector. Another name that kind of pushed up in the similar sector as well was AMSC here. AMSC also being just a major component of the semiconductor space. Very good, technicals, very good fundamentals, good qualitative story backing good growth, and a really nice setup here, right? You can see price holding above the key moving averages, kind of contracting here. This is forming what's called a W pattern, right? It's not quite a double bottom. I know double bottom is also a very nice common pattern that is used, but typically double bottoms appear at the bottom of a chart, right? When a stock is downtrending heavily, you get equal lows at a bottom, and that indicates possible signs of reversal. So this technically isn't a double bottom, so I like to call it a W pattern because it kind of shows exhibit same signs, right? Moments where you had selling pressure come in, attempting to make new lows, but buyers unable to break above, unable to let sellers gain control. And then once we saw the rejection, sellers trying for a second time here with relatively lower volume, but then strong buyers coming in here showing strong growth, right? So moments where sellers started to take it down, but buyers exhibiting strong growth, keeping it in this range. And then once they form that W pattern, you're looking for that breakout above the neckline, also with strong buying volume, showing that there's strong strength, not only keeping price at this range, but wanting it to go higher. And then this gave us a nice breakout from this W for a solid 20% return here as well, right? Nothing too crazy. As again, the market was kind of showing some general weakness at this point as well. So on some of these higher risk growth names, we'll like to lock it in. But this one also, again, if we take a look at the fundamentals, again, this one I think I traded more for the story, but this one also exhibits pretty decent fundamentals here as well. If we take a look at the statements, right, strong revenues, good year-over-year growth, and just accelerating, right, positive. Like look at the past 3 quarters here, just strong acceleration for revenue, strong acceleration for gross profits, and then just operating income was out of the water there, 3-digit year-over-year. So that's just strong numbers, good balance sheet here, good assets to liabilities, really strong current ratio, right, well above the 1% that we like. Really good debt to equity ratio, so they're not that solvent, they're not that leveraged. Sorry, so just exhibited really good signs, giving us a nice breakout there as well, right? So that gave us a nice push up, locking in at 20%. Once it started to show signs of heavy distribution like this day here, that would have been also a good possible sell vote, right? When you get above average selling volume at highs, is also a good condition where we lock and gain. So not only having again good buy rules in place, but having sell rules in place as well is very important, right? So this is a good nice play on AMSC. Next one, SiTime Corporation, SITM. This was a really nice play in a cup and handle setup. Also in the hyperscaler AI data center sort of craze. You're kind of noticing that a lot of the names that we're pushing up since April really focus on a certain select industry, right? But SiTime here also got a really nice push to the upside, right? Breaking from a cup and handle setup, exhibiting good signs. Look at all these days where we saw above average buying volume coming in versus selling. Good sentiment on the money profile, above the key moving averages. This one also had really strong fundamentals. If we look at SITM, look at their fundamentals here. Right, so looking at the income statement, really strong year-over-year growth, right? Showing signs of acceleration here as well. Income going from negative to positive and growing. So like really good signs, right? Like again, negative earnings, right? Negative income, but signs of acceleration, signs of growth coming in, right? And that's what we like to see, because at the end of the day, growth and expansion is what's going to drive up a stock price, right? Depending on whatever qualitative factor is backing it. So good expansion there. Balance sheet was also looking very good. Solvency was looking very good, right? Good current ratio, very high level numbers, very low debt to equity. So just all in all, a very strong fundamental company and just a good setup. A cup and handle base play. Once we saw good buying selling volume coming in, and then we got a breakout here with volume triggering that entry, and this was also a very nice solid 20% return, right? Not bad. Can't complain about 20%, right? The S&P 500, the major indices, they move up like I think around 18 to 25% per year. So, and that's what a lot of hedge funds, a lot of ETFs, a lot of major investment bankers will benchmark their trading to, right? And again, we're getting that in a stock in a very short time as well, I may add as well, right? So really good plays here. SITM was another play. KTOS, a little bit different, again, in the aerospace and defense sector. So this is a name that has good fundamentals, was getting good positive industry tailwinds, as well as I mentioned earlier in the presentation, with the government, supporting increasing defense spending, pressuring all these companies to increase their rocket production, their drone production, and pushing Europe, NATO to increase that 5% spending. So good industry tailwinds. KTOS here also just a really good fundamental company as well. If we dive into KTOS here now. Right, KTOS, we'll take a look at their fundamentals. So pulling back recently now, this is due to, again, with tensions now dying down. So again, just understanding what's going on with the sector, right? So with the Middle East now calming down here a little bit, less demand for all those missiles, for those drones, which is leading to a little bit of selling. So this would be a good area to, lock in those gains on this massive move to the upside. But I'll talk about this one in a minute, but let's go to the fundamentals. Talk about financials here, looking at their statements. Right, so really good statement here, right? So strong acceleration on that revenue number, wasn't really meeting the strong gross profits or operating income, but exhibiting signs of growth in a sector that's getting positive tailwinds. And I believe this one did have pretty decent solvency as well. So good, very good current ratio, and pretty decent on the debt to equity as well. So really good numbers, all in all, getting positive tailwinds as well. So this was a nice W pattern setup here as well. And And this was a nice W pattern here set up as well, where you got a possible push on from sellers, very weak on the contraction. Buyers came in to defend. Sellers tried for a second time, very weak, unable to break above. You got your neckline established now as well. And then once you start to see strong buying volume coming in, we got a day finally with a strong breakout, and that led to our entry there. This one I closed off for 10% just because this one was coming into some possible downside effects, as well as we were coming into some risky news events as well. So I did happen to de-risk out of this one. But if you diamond handed it, and if you, again, I mentioned earlier, again, I'm not perfect, right? Swing trading especially is something that I've recently started to do back in April, March. As a lot of the members know, I mainly used to do day trading. I mainly do futures as well, talk about options. So this is also really new to me. So I do tend to make a lot of mistakes. One of the major issues I'm dealing with right now is with selling too early, because if I just respected my sell rules, right, if I kind of held at that 10-day EMA and kind of just rolled the trend to the upside, then I would have caught a very nice play here as well, right? If you take a look at KTOS, just riding that 10-day after that gave us a really nice move up about 40% there as well. I know a lot of traders had held, so nicely done, and hopefully they locked it in now after the Thursday, Friday moves that we got. But really nice plays there all in all, but you guys can see a commonality, right? I have my rules and I'm sticking to that, and I'm looking for points of entry where it makes sense in terms of risk, right? So just going back to a lot of these plays as well, again, approaching every single trade here on a risk first basis, right? So if you go back to the examples, right? So on this trade on APLD, the reason why I took it here is because I can easily put my stop loss at the 10-day, 21-day, and that for me, that is good risk management. You have a lot of traders that be like, okay, AMSC broke out, they missed that entry here, they're seeing it push up, and now that it's exhibiting signs of growth, like, hey, should we enter here? Should we buy AMSC? It pulled up nicely, but where would be your risk reward? Like you would have to have a very heavy stop loss for very minimal upside, and that's just not good risk management, right? So again, if this stock had pushed up and was already exhibiting these signs, then it's okay. I missed the move. There's a lot of opportunities out there. Reset, look for the next one, right? So this one is giving good signs, good risk management there. Again, meeting all the other conditions as well on our trading, good technicals, good fundamentals. AMSC here, nice breakout, right? I'm able to catch this play because it's relatively close also to the 10-day, 21-day, and to this previous swing low. So well in that 7-8% risk management, good. I like to see that. You can also see moments getting tightening action. I know a lot of traders that will play like in this tightening and keep their stop losses tight as well. That's also a viable strategy, right? SITM, just a nice breakout, able to manage my stops closely, riding this previous low or the 10-day EMA here as well. And then KTOS as well, getting this nice breakout, being able to keep my stop is pretty close either to this previous swing low or to its 21-day EMA here as well. So you see with each of these trades, like I'm not going in with this being like, okay, markets, this is a nice setup, I'm getting 20%, it has to go up, right? There's a lot of moments where it doesn't, right? What we saw with this first trade here with APLD, when I was looking for this breakout to come in initially, it failed on me, and this one closed at a slight loss, right? And it does happen, but by having the strategy, by having the psychology and the risk management in place, it's able for me to stay in the game longer. And because I know with this strategy and I'm confident in the strategy, I'm able to catch more winners than losers. I will be profitable in the long run. All right. So some other examples that we can go over that I didn't really share in this presentation yet, that we had also caught in the group, Marvell. All right. MRVL. This was a really nice play here that we caught to the upside, right? So for this one, I was watching for a break above the 50-day SMA, gave us that nice push. And again, if you guys are a member in the Portfolio Alerts channel, I will share this as well, right? In the research channel, I share pretty much, what the setup is looking like prior. I'll put in that pivot point for you guys. And then once we get that breakout entry, I'll establish like based off of a certain set of rules, again, that is comfortable with me. Don't take this as advice. Make the trade your own, apply your own characteristics, but according to a certain rule set, I'll set where the buy zone, where the stop loss, where the take profit would happen to be, right? And this one was a decent push up. Again, with the Friday's move, we did kind of close this one out early. Was hoping for it to, push up into take profit, but hey, again, can't fight with the market, right? Once the ES here started to break that 10-day, 21-day, put on kind of the risk off hat and starting to, rather than add, to manage some of these plays. And some of your higher risk names, right, that don't have the strong fundamentals backing it quite yet, or don't really exhibit very strong characteristics, those are the names that you should look to manage first, right? A lot of if you follow IBD, they call it your C plus setup. So like organize your stocks. What are your high grade A plus setups that you're looking for? What is your B tier? What is your C tier? And then typically when you see like heavy downturns like we saw in this name, on Marvell being kind of one of my C tier names, I look to manage it pretty quickly off of this sell. So it closed pretty much break even. We had to stop at the 10-day EMA, but the setup here was pretty clean, right? We were getting a bit of a cup and handle setup, very deep on this pullback, and then we got a nice on the weekly time frame here, a nice kind of double bottom pattern as well. So this will be kind of more of a double bottom as it was exhibiting signs of downturn. We got this W shape, and then we're looking for that break above the 200-day SMA. Gave us a pretty nice push up. Was hoping for a bit more, but ended up closing at break even with this Friday's move. And hey, it happens, right? Not every trade becomes a winner, but you can see how I'm positioning myself in the market to protect myself, right? Because a lot of traders will be here now and they'll kind of rely on hope. And I'm also watch Marvel, right? If Marvel on Monday starts to exhibit signs for upside, if we kind of get back above the 10-day here and hold, then I might look for a re-entry. I'm not ashamed of double dipping in some of these names here as well. But again, Marvel was one of those names. Again, this really good breakout, didn't really work out too hot here. Tempest was another name here where I made a mistake of selling too early, but it was also just a very nice setup. Tempest AI, again, a stock with not the best fundamentals, but a really good story backing it, a lot of institutional sponsorship backing it. So for that reason, it looked like a really good play. And for this one, we were watching pretty much, we were seeing low volume on this contraction here. And then once it started to kind of push up, was very explosive volume to the upside. So this was a good entry. I was looking for this shakeout and then re-enter in this buy zone. And I ended up selling this one early, as it was giving some signs of distribution. I also wanted to kind of de-risk here a little bit on this name, and just immediately the next day it kind of pushed up, right? But if I had respected my stop loss or my stop rules and just kept riding the 10-day EMA, it would have really caught us into that initial take profit. And this was a really nice move from our buy zone here, giving us roughly about a 20% return, right? Selling off on the Friday session due to, again, the market conditions and getting a little bit above average selling volume. But a really nice setup here on Tempest. Smaller names, SE, we played recently. We'll see how this, again, this was just a really nice contraction here. SE, if you guys don't know, is kind of like the Amazon in the East. They're really well positioned in a lot of different sectors. So on this name, I was looking for a retest of the 50-day as it was happening with very low volume on this contraction. And then we're getting some pretty nice volume on the breakout here, leading to what could have been a decent move. I think if the market didn't turn around, this one could have potentially hit or take profit. But again, with this turnaround now, looking to lock it in. If you guys, I did mention this on the Friday session, because again, once, not the first time bounce, right? We saw a lot of times here where ES has came down in a single day, tested the 10-day, tested the 21-day and bounced. But once we lost the 21-day and things were looking a lot more, heavy downside pressure, a lot of the big tech names started to kind of roll over, then I was looking to, okay, got to de-risk out of these names. So they close off SE as well, around break even. We'll look to re-enter it if it gives us signs of a possible bounce here off the 50-day. And then AEIS was another play that we potentially caught here as well. Again, this was also setting up in a pretty nice pattern here at highs, was exhibiting good signs of supply and demand. Worked out for a bit, but then with this Friday's move kind of giving us that close. I also did close out this one pretty early here and break even as we were getting several signs of distribution. But some decent plays there, but again, you can see that some of the more recent plays here didn't really work out too hot as the market did turn around, and this does tend to happen. But because I was positioned correctly, because I had the strategy in mind, because I had these, my stop losses already in, I was already comfortable with the ticket prices, right? With riding the 10-day, riding the 21-day, with a 7 to 8% stop loss. That's my ticket price that I'm paying in, and I'm okay with it going against it because that's what my strategy entails, right? And you can see previously that we caught a lot more winners using this than we did losers, leading for me to have more confidence in the name, right? Some other examples I want to go over here, some of the gold plays, right? We can talk about, we did a really nice job in the group catching a lot of moves on these gold miners. The first one here was AEIM and Janico. The setup here on this name was that it was establishing a very nice cup and handle setup, was contracting on the pullback, and then we got a nice bounce off the 50-day and a nice breakout above our pivot here with above average volume. So this was a nice entry on gold, and we got to a really nice move to the upside, continuously watching the 10-day, 21-day on its way up. Gold was also a nice name that we kind of held just as a counter hedge in our portfolio. And the reason why I like this name is because, again, AEM was presenting good signs of strong fundamental growth, right? If we look at the balance sheet, right, positive year-over-year growth, accelerating in the right direction, right? Some quarters giving us 3 digits here. Looking at the statistics, right, really good solvency, high quick ratio, low debt to equity ratio, what we like to see, strong fundamentals. And again, also if you look at gold, right, so again, being in the gold sector, gold futures was also something that we kind of kept a close eye on, right? So look at GC here, gold futures, and pretty much we were seeing, while these names are running up, gold was kind of breaking out very parabolically, right? We had kind of, if you look at the weekly, we had all, and again, this was mentioned to members, hopefully you guys caught along, but we were kind of in this contraction, saw a nice breakout, and then since that move, gold hasn't turned around. So just because gold was pushing up here nicely to the upside, as long as it was continuing defending its 10-day, every sort of mini pullback was getting bought up. This gave us more confidence and continued to hold some of these miners. So AEM was a beautiful setup here on this cup and handle around the same time, but late August, late September, just kind of since that breakout kept rallying to the upside. So really nice hold there. Some other gold names that we caught that were really nice was KGC. Again, just exhibiting the same things, really tight contraction here. And then we got a good day with a strong breakout with good volume. It was giving us good bullish sentiment the whole way on the money profile, and just a really strong breakout here. And just, again, really strong fundamentals as well. Looking at the financials, look at the statements. Strong year-over-year growth, right? Strong acceleration in the right direction. Statistics were really strong here as well. Looking at the current ratio, really high levels, very low debt to equity. So just all in all, meeting every single check mark, right? And that gives it simple, because that's not putting on me, okay, I have to get in, I have to get out. If I have my rules, that's what's telling me to get in and get out. So this one told me get in here at KGC, and since then, really nice push to the upside here, continuously riding the 10-day, 21-day as well. We'll see these names now with the gold plays. I am still holding a very small portion of some of these names still in my portfolio, as again, gold is just a good counter hedge. If we do kind of see equity markets pull back with a bit more vigor, then that could lead to traders to position a bit more risk off. So that could also lead to positive tailwinds on gold. So we'll have to wait and see. Again, early on, guys, in the market, especially next week, given this major sell, I'm going to be waiting, right, seeing how the market digests the move, and then we'll see if we catch some of these plays. But I am holding some gold here, so we'll see if we continue to hold that 21-day KGC. And the last gold play that we caught that was nice was Barrick Gold, right? Barrick Gold, just a really strong breakout here with strong volume. Again, a bit of a cup and handle. We're getting contraction in price, really low volume, right? Low volume on this contraction, and then a strong day with a volume breakout and leading to a good entry. And then since then, just riding the 10-day, 21-day on this entire way up, right? And just watching gold, seeing that the industry, seeing the sector is still strong, seeing that it was a very odd September for sure. Yeah, as we were seeing kind of equity markets up, gold was also up. Typically, they do an inverse correlation, but again, there are times when they can push higher. Again, could also be exhibiting just because you had the equity markets that were driven by your tech names and your interest rate cut hopes, and then you had gold here driven by the true state of the economy and the geopolitical stuff that was going on as well, right? So that could be a lot of positive tailwinds. We'll see now what happens. Again, just with a lot of these names, just riding the 21-day here now to see if it holds up. On top of that, we'll also talk about a bit more high risk names, right? Names that really didn't have strong fundamentals, but had a good story, right? First name here is Rocket Lab. So Rocket Lab was a name we caught recently here, as this name was giving really strong technicals. It was still holding above the key moving averages, exhibiting strong signs of demand coming in, bullish sentiment on the money profile, strong volume coming in here on the daily volume bars, leading to then a strong breakout here to the upside. And then this one also got a good story because it was inking in a lot of contracts with Europe for future possible launches, as well as you had Trump continuously mentioning the Golden Dome, which is going to have a space portion like missiles in space to kind of counter incoming incoming missiles out in the air. So that's kind of creating positive tailwinds here for this company, and then just exhibiting strong signs of growth. So good technicals, strong story, leading us to get this one. But again, this one just not the best fundamentals, right? If you take a look at their revenues, I mean, this is just some pretty shady, like not really seeing the strongest growth, actually deaccelerating here, negative year over year on the income statement. Right, it had a pretty decent balance sheet, but again, just not exhibiting the strong fundamentals we like to see. But because it's a good story, because it's a leader in its sector, and the industry, the sector as a whole was getting really nice push to the upside. Again, another good name in the kind of space sector that was getting good positive news was also ASTS. I missed the boat on this one, but if a lot of traders that did catch this, also just a really nice setup based off of weak fundamentals, but a very good story, and then a nice break, retest, and continuation to the upside. So this was a good play here as well. Some other high risk stuff, you've kind of seen the quantum names, right? My favorite quantum name was Rigetti on an absolute monster run to the upside, again, exhibiting good technicals, holding above the key averages, giving a strong breakout with good volume, and then just not, again, fundamentals very weak, right? Very has negative growth, negative revenues, right? For a strong company. I mean, for this price action, very unwarranted, but because the quantum space as a whole was gaining traction due to inking a lot of government contracts, Rigetti here inking a contract with Space Force, you had IonQ inking contracts with, I think, the Department of Education and Department of Health. So that was just creating a lot of positive tailwinds in these sectors. And you also had a lot of analysts also give several upgrades to all these names as well. So really strong breakout, good thesis, giving good prospects of future growth, which is what we like to see. And then off that, a nice push to the upside. Also, again, just really strong bullish sentiment here as well, adding more confidence to the play. So that was some of your quantum names got to push up. And then the kind of last kind of sector that is a bit more high risk that we also saw good growth in was the nuclear names, right? Names like Oklo, which also again just don't have the strongest fundamentals, but because it was a good story, because you had this kind of thesis that, you know, a lot of these new and upcoming data centers will require a lot of energy, while the nuclear was gaining traction. And because of that, we're seeing a nice push to the upside. Oklo here, again, no deliverables, but inking in a deal with the Department of Defense to build out their place in Alaska. That created a really nice breakout here. And then as we were getting, you know, more tailwinds in the nuclear space, that was also creating this push to the upside, leading to a very nice parabolic move here as well. So you can see that sometimes, you know, fundamentals are definitely important. If you do see, you know, strong fundamentals backing a good story and a good technical setup, I will, you know, tend to take a bit more risk in those names. But names that, you know, that could get positive, you know, industry tailwinds, that could have good prospects for future growth, again, very important. If they have prospects for future growth, then you could look to see if you can enter in some of those names as well. I wouldn't look to see, you know, a company that is weak, exhibiting, you know, weak fundamentals, and they just announce, hey, we're going to reduce costs in the future, or, you know, we're going to change management, or hey, there's like this big investor that's now coming in. Like, that's not really a strong fundamental change that I need to see. I need to see a good, you know, a solid reason that the company could possibly see expansion in the future. Okay, so that's some of the higher risk names that we play, and again, we'll see what plays in the markets, right? Again, we talked about it as well in previous sessions, but typically I'll go through my scanners, right? I'll look at certain technical conditions. I have scanners that are set to look for stocks that are exhibiting a good acceleration in revenues. I have separate scanners that are set just to look to see if prices are in an uptrend above key moving averages, and then going through those scanners, seeing if my conditions are met. I'll share those names with you guys in the member section, and then if there's good breakouts, we tend to play it as well. But again, this is how I trade, right? This is how it meets my psychology. I'm not going to say that this works out for you 100% of the time, right? There is that level of risk. There is that level of due diligence. You do have to put in your own work as well to make the trade your own. But hopefully with, you know, with this, you can kind of get a little bit of an insight on the right way to kind of do things. All right. So that is pretty much everything I wanted to go over today, guys. Wow, I didn't expect this to kind of go over an hour, but I hope you guys found this insightful. Thank you guys for taking time out of your Sunday, your long weekend here to join me. I hope you guys found this a little bit of educational information. And like always, guys, if you ever want to reach out to me directly, if you want to do a one-on-one where we can talk about more detail, or if you guys want to interested in joining the member section, just hit me up with the DM. We can discuss, right? And I'm always open to any questions at any time, even here in the general section. If you guys have any questions on any topics, right? This community was made in our Discord to, you know, help each other grow, to help foster each other to become more financially independent. So I do like the way it's going, but it's tough when you kind of, You know, when you see the market on a downturn, we constantly tell people, be cautious, have a trade strategy, and then they call you on Friday saying, hey, my account is down heavy. What should I do, right? It hurts hearing that kind of call, right? Me and my dad were talking about it. Like, we did the right things. We kind of positioned ahead of time, but we can't tell you, like, we don't have access to your accounts. So it's very important that, you know, you are able to kind of maybe apply some of these things to your trading. Hopefully you guys found it informative, and hopefully, you know, we'll see what the market brings us with this correction. We'll see now if we can catch any more plays in the future. So thank you guys so much for joining me for this lesson. I hope you guys found it informative. Have a good rest of your week and all. And if you guys, it's gonna stop the recording.